Hi, this is Liqian Ren, Director of Modern Alpha Wisdom Tree ETFs. Welcome to China of Tomorrow podcast series, where we navigate China, India, Japan, and the broader emerging markets with members of Wisdom Tree and other industry leaders. Today is February 2024. China's local A-shares market was closed last week from the Chinese New Year. A lot of news happened in the last 2 weeks. First, China changed or sacked the older security regulator head, CRSC, which is the equivalent of SEC in the US. Secondly, we can see that domestic travel, even though per person spending is much smaller, but a significant number of Chinese are still traveling. But overseas travel indeed is still much lower compared to pre-pandemic level. The third thing is that there was some talk about private tutoring being relaxed, and as I mentioned on Twitter, no, that's not the way to read the current some of the regulations coming out. I think for private tutoring or gaming regulations, people just have to think that accept that China is very different in these areas of regulation. The government in its effort to, you can say that it's their goal, whether it's successful or not, but I do believe its goal to reduce burdens for parents and kids, and also making sure kids don't play on games on too much. Again, whether right or wrong, but that's what the Chinese government right now believes in, and the regulations will stay. So I think it's really important for people here to really truly understand a lot of those regulations coming out. I'll go a little bit in the details of the CRSC and what's my general framework to think about these kind of changes. We've talked about regulations a lot, and it's very important for China because Chinese market is very dependent on a lot of regulations coming out of the government. In the end, if we have 2 seconds, we might talk a little bit. Skirmish happened on Taiwan Strait. There was a fishing boat that was capsized, and 2 persons from mainland unfortunately died while chased by the Coast Guard by Taiwan, and China in the way to soothe the domestic public opinion or boarded a Taiwanese cruise boat, about 35 people. And I think the incident has ended now. And just want to say, because the current government in Taiwan is still, the presidency is still held by the DPP party, which generally has been much less about engagement with mainland. So there is no official communication between Taiwan and mainland because of the continued DPP in power. So all these are going to make many of these kind of events more likely in the future, at least in the next 4 years, and unless China's reestablishes official communication with Taiwan. I think that also give us things to pause. Then hope US and China does not get too close, because sometimes accidents do happen, and if there are person deaths, even though the person who died may be at the fault in the beginning, still the public opinion in the country is very difficult to soothe. So we can only pray these kind of things happen less. But unfortunately, without official communication channels right now, these kind of things are bound to happen again. So a little bit more talk on the CRSC. I think while Chinese market was closed, the US market was kind of a bit more positive. And personally, I have to say that obviously it's also the whole equity market was quite positive with so much good news in AI. But I think sometimes people get positive on China
a little bit depend on just some like a headline news, but if you drill down, I think nowadays you really need to drill down and understand that a change of a CSRC head itself is not necessarily a significant news, because it's true in China's history. There's a lot of times CSRC head got fired when the market was really struggling, and we do see market rebounds over the period, and then market goes down again and get fired again. But the reason there was market rebound was still that the economy got significant reforms, and then was able to loosen up a lot of these so-called animal spirit. And right now, I think in China, because typical Chinese are still really recovering from the housing bubble burst, there are some animal spirits. People who are in venture capital are still quite positive from my talking with some anecdotal evidence. And I do believe China's entrepreneurship will get revived. But for now, I think it's still quite weak. So CSRC head change is not enough to give a really high positive signal for the market. And actually, if you look at the actual changes coming from CSRC, some of it kind of branded itself as tough regulations, but some of the fines or punishments they handed out was not that severe. For some of the illegal tradings, most of them got fined or forbidden to be in brokerage business again. Those are really not significant punishment. So I think you need to take what's action coming out of CSRC and see how serious it really is, understanding that what the current market demands is much more rule-based, much reduction of uncertainty. I mean, CSRC going around giving out fines sometimes can increase uncertainty because people don't know how CSRC makes decisions, right? So I think, again, I know in the beginning of New Year, everybody is very positive, and we have been continue to be cautious. That is why for China investing, I think ultimately, just like Japan, when then the market gets cheap enough, and then there is enough improvement in regulatory environment, people would jump back in. But between now and then, significant jumping in, there will be significant risk. Risk is two sides, right? You can have 10% China up, but you can also, quick 10% China down. So I think for people who invest in China, really need to have a quite large risk tolerance if they want to significant overbetting on China. Again, I think a lot of things happen, and I try to tweet out quick bites on regulations. Sometimes we are, really one-person team. It's difficult to, be attentive to everything. You can reach out to us if you have a significant investment in our strategies and funds. So we are very happy to talk to you and share our insights. I think in terms of in China right now, really you need to not be led by just the headline, because sometimes the headline can be over interpreting what's actually going on, and that's similar in what's coming from China and similar from what's coming from US as well. US have quite some headlines on China. For example, one of the top thing coming out of Washington nowadays is about China overcapacity or dumping in the global market. Historically, many of these charges has not proven to be right. I think China right now do have overcapacity, mainly because it was in a kind of housing bubble burst, so people's consumption is lower. But I don't think there is systematic, because China's production capacity is high. So China itself is adjusting. The entrepreneurs are adjusting to the local environment, and during this adjustment, it will appear that Chinese export is still very robust, but I wouldn't say it's dumping on the global market. And for those, I actually wouldn't take too seriously. I think there are a lot of those who are driven by narratives than actual evidence. Okay, well, so good to talk to you again, and then we will bring more guests and to talk about China, and also give timely updates on China's what's going on in China. Thank you.